Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions and any questions you might have about short-term, long-term, where the best, how to invest in current market, and any questions you might have about your subscription. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. If you're new to trading stocks or options, or you're new to Tradespoon or Yellow Tunnel, I encourage you to read the optionsclearing.com to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm going to show you what I do in my own account based on my own account risk tolerance level. I encourage you to consult your financial advisor prior to making a trading decisions, and also it should not be assumed that the future trade picks will be profitable or will equal past performance. All right. Some rules before we let's go into market conditions. Right. That's probably on everybody's mind. So let's see. We have Nike announcing earnings, Carnival Cruise. Looks like market is turning around. All right, let's look at spiders. So spiders is actually turning positive. It's fluctuating between gains and losses. Or as low as 360, again, posting a new 52-week low, which is 359.70 now. So 360 level is your main support. This is basically testing June lows. So the question is, we're end of the third quarter. We have next quarter starting, fourth quarter starting. The question is this the bottom, right? Or where is the bottom, right? Everybody's trying to determine where is the bottom. The positive news is that for the past 5 days, we're kind of just sitting on the bottom, right? Sitting on the lows, was not moving higher or lower. So from my perspective, it's not enough information to determine whether this is the bottom or not. Most likely, since we're still sitting at these levels and next earnings season doesn't start until next 2 weeks, we have CPI data, you have to wait another week or two. It is reasonable to assume that, and October is usually a very volatile month for the months, that we will not, that most likely we will not hold this level, right? That we will at least get to the 50% retracement, which would be around 350 level, 348, 350 level. That's 50% retracement from 52-week high to pandemic low. More important question is, will we have this capitulation, right? Everybody's talking about there's a lot of risk, geopolitical risk, microeconomic risk. Will we have a capitulation where, retail investors, professional investors will just have indiscriminate selling? And when will this occur, right? So from my perspective, I think the positive news is that the 2-year, 10-year yield, right, continues to drop, right? Right, 10-year continues to drop. We're retesting 370 level. The breakout was 3.5. So we do have a pattern of lower highs in 10-year yield, and we have similar pattern in a dollar, right? So dollar pulling back, 10-year pulling back. Is this the top? Probably not, but is this a top building process, right? It does look like a top building process where for the few days we haven't, dollar didn't break through the 115 level, 10-year yield did not break through the 4%. So even if the 10-year yield does reach 4% and the dollar does reach 115 level again, I don't think it can marginally overshoot, but not have this parabolic move to the upside. So as long as we don't have this parabolic move, continuation parabolic move in 10-year yield in the treasury and in the dollar, then I think spiders might make marginal lows, right? I mean, it's been doing this every day, right? So it's reasonable to assume that we will trade below 360, but we're not going to have this, 10-20% capitulation. So what does that mean? It means from risk versus the reward, can the market drop another, in the months of October, can it drop to 350 level? Can it drop to this 50% retracement or the pre-pandemic low? Yes, right? So we're talking about another, maybe 20 points to the downside, right? From 364 to 344, right? Worst case scenario. So 20 points to the downside, right, by the months of October. By the months of December, can we have the after midterm elections? Another unknown is midterm election, but after midterm elections, can we retrace back to 400 or even 410 level according to the our model? Also possible, right? That's about 40 points maybe to the upside. So I think in terms of risk versus reward, it doesn't make sense to chase the market to the downside. It makes sense to be either market neutral or actually slightly bullish, right? Maybe you still have your hedges for October, November, or I started rolling them in March because I think we will have continuation of the sell-off into the next year. The market will continue to the next year. But for this year, for October, November, December, for the fourth quarter, I think it doesn't make sense to chase the market to the downside. I would be slightly I would be defensive, right? I would be defensive. And either be market neutral or slightly positive, right? But not chasing the market to the downside. So I propose to have 4 positions. You see most of the stocks trading in high correlation to each other. So maybe you have, out of 4 positions, maybe you have 2 bullish positions, find the strongest stocks, maybe Apple, right, has been the strongest, or some of the energy names, and then you have 2 shorts, right? If you're bullish, maybe you have 2.5 pluses and 1.5 minus, something along those lines. I would still be bullish, still have some bullish position because market can rebound back, or if it does pull back, at least start closing some of your short positions. In terms of VIX, again, not a lot of, we have reached the upper band of this 2022 or even 2021, right? Since the January of 2021, VIX hasn't been above 40 level, right? We got close to 35 level. So from VIX perspective, we reached extreme levels. From dollar currency. So this is a bull case, right? The bear case is the market is sitting on the edge. It's been, kind of not going anywhere from this and continue to make new lows. So at some point we might have, marginal break of this level and retest of 360. All right. Is there bias end of the quarter? Yes. So since we have a third quarter expiration, expect more volatility, right? So we can see spiders is fluctuating between gains and losses today, right? We have PCE data, inflation data is still worse than expected, right? Kind of continuation of CPI and PPI data. We've been fluctuating between gains and losses, right? In the past, market has been open. Let's see, let's do 15 minutes. Right, so we pull back on the PCE data, and then now we are trading at session high, right? We're trading at session high and yesterday's session high. So trying to break through that level. But definitely end of the quarter, Friday, and then we have multiple the quarter expiration and that rebalancing, right? The rebalancing of the money managers, hedge fund managers, then definitely can create more volatility. Kevin, yes, Russia, Ukraine, that's another unknown, right? That's an escalation, they're annexed, I don't know, almost 20% of Ukraine, that the regions now is part of Russian Federation. He already announced that if Ukraine is going to continue with their offensive effort, that they will, protect the territory of what is now Russia. What used to be Ukraine now is Russia. So there's definitely escalation, right, and mobilization. How will it transpire? It's very hard to tell, right? It's very hard to tell. Please explain the spider's calculation versus the AI, which has turned up for 4 days now, always next day. So in terms of spiders, in terms of the model shows bullish, right? So models is a neural network. It trains and learns on the data, makes predictions, and it's basically showing that market is oversold. Can it continue going lower? The model actually sees what's the low? 356, maybe even 350, reaching 356. But in the next 10 days, it does see that the market turn around, right? I think, from my perspective, again, core scenario is we're doing something like this, right? Oh, this is 15 minutes. Let's see. Maybe we try to close this gap. Maybe we pull back again, in October, right? We're kind of fluctuating, maybe make marginal, maybe we rally to, I don't know, even try to close the gap, 370. For now, I would sell into the rallies in October. I would continue to sell into the rallies, right? I don't think we're going to reach 400 in October, right? I don't think that's the case, right? So I would be a seller into the rally, maybe 370, maybe best case scenario is even 380, right? Maybe we can get to 380, right, in October. And then in November, after going into the midterm election, I think that will create volatility. Maybe we'll get to 350, 355. And then toward the end of the year, I think there's a higher rally, toward, this prior high, 410. How much is it going to retrace? Half of the time it's 50%. So from 410 to, let's say, 350, 60 points. So it might retrace 380, right? Or 62%, you can get to 390, or completely retrace to 410, right? So somewhere, this is by end of the year, it's feasible to expect that we'll, end of the year targets are now 380 by a lot of the wealth managers. Maybe somewhere between 380 and 400 is where we finish the year. If the target is 380, that means, we might reach 400 by second week of December, then maybe sell off, the last week or something along those lines. But this is my core scenario. All right, my core scenario, we hold this level, maybe marginal break, and then after midterm elections, we continue to rally. But again, it's a rally in the bear market, right? And I would expect that the January, February, again, volatility will pick up again. Any other questions? Thank you, Bill. Let me know if the AI makes sense. So right now, 10-year yield continues to pull back. I think that's positive. TLT slightly negative. LQD slightly positive, which is good. It's where we saw high yield is slightly positive. VIX pulled back from 35 back to 30. We have value stocks are up. QQQ is 0.5%. Semiconductors, ARC is up 3%. Small caps are up 1%. So, all right. In terms of earnings, Nike, right? Really big sell-off, about 10% sell-off on Nike. We did the Micron trade. Again, one of the my favorite strategy is selling out of the money premium. We have some issues with, the broker dealer I'm using, Trading Block. to synchronize my trades, so they're not reflected correctly. I apologize for that, but let's see. But I did do Micron. Let's see if it's gonna be hard to show it. Maybe it's actually restored. But I did sell 54 call for Micron for 24 cents. I sold 46 put, 20 cents, so I was able to collect 48 cents, right? 48 cents on the $51 stock, it's almost 1%. It's a little bit less than 1%, maybe 75 basis points gain. So that's, I think, is my favorite strategy, either earnings or this is the most popular trade right now. It doesn't matter, who is doing this, but this is the most, is the idea of selling out of the money premium. You see different variations. Some people are not comfortable trading weekly options, so they're using monthly expiration. Some people want to give themselves a little bit more time, or they're looking for a higher premium, maybe not 1%, but they're looking for 2% or 4%, but then they're not trading weekly options, they're trading monthly options. But the idea is that you look at the estimated move, right? You look at the Micron announcing earnings, you can implied options volatility, you look at the range where Micron is expected to trade, right? I expected 10% move to the upside or to the downside, not more than that, less than 10% move. It only moved 3%, so this is an extreme example where in one day, basically all of the premium is, the theta gets taken away, right? Because I'm trading weekly options. If I traded monthly options, I would still make money, but maybe less money because the time decay would not be as, the closer you are to expiration, the higher the rate of change of the underlying theta and the time decay of the extrinsic value of the options data. Okay, you're headed back. Is there bias end of the quarter? I don't think there is a bias end of the quarter. There is a lot of volatility in end of the quarter. There is a rebalancing. I mean, you can argue that if everybody re-rated the end of the year target for 2023 and end of the year target of 2024, the bias will probably be to the downside, right? As you last quarter, half of the people still thought that spiders will post, 52-week high, right? Half of the market participants thought we're going to end the year, 460, 480, right? Even like months ago or 2 months ago. Now, all of the major financial institutions end of the year target is 380, right? So now that the quarter ends and we're looking forward, I would assume the end of the quarter rebalancing will create more volatility, but the position will be more defensive, right? To accommodate these new targets. Apple is a problem, right? Apple is a problem. Question was an Apple. I don't know what the exact question is. It's Apple question mark, but Apple, Apple and Tesla are elephant in the room, right? Apple, one of the few stocks that posted almost 52-week high in the end of August, right? Nobody expected this, but the problem that any negative news or perception, they are not ordering as many parts because they think that demand for, what is it? iPhone 14 model will, is not sustainable and will slow down. Okay, and then the market stock gets punished, right? The stock goes from 175 to, it dropped 20%. It dropped 20% literally in 1 month, and still hasn't reached the 52-week low, right? It's still another 10%. So if Apple, and there's no support. So if Spider is gonna have this marginal new lows, it's because of the Apple, right? It's because of the Apple, because it still has 10% more to the downside, doesn't have much support, and Tesla, right? Very similar price pattern. It's sitting at the September low. It's again marginal break of the September low. The next level of support is 52-week low, 221. That's another, 10-20% lower. So Tesla and Apple are a bear argument why we will not hold this 52-week low in the next few weeks. All right, Kevin, thank you. I will review the email. Thank you. Thank you, Kevin. I'll take a look at the email. You do want to be careful. There's millions of indicators. No, millions, probably exaggerating, but hundreds, right? There's hundreds of different technical indicators, RSI, volume-based oscillators, reversion, range. You cannot follow all of them, right? You basically learn, or you follow certain indicators that make sense to you. Maybe it's 3, maybe it's 4. MACD is very popular, RSI, true average. And then you just follow those, right? So forgot what's the other, what were you using? Macmillan, right? If this is your favorite indicator, great, you can follow it, right? But at a certain point, you don't want to follow too many indicators because sometimes they will contradict. The oscillator will say one, but the momentum indicator will say the other, right? You don't want to kind of be overwhelmed with different indicators. Thank you, and I'll be sure to check it out. All right, so that's my favorite strategy in terms of so few things in terms of preparation, right? I encourage you to have a pre-market routine and always concentrate on things that you have control over, right? You don't really have a control. We have Bank of Japan news, we have Bank of England news in terms of how they're manipulating their currency. China is manipulating their currency. US is manipulating currency, and these announcements come at different times, random. You can't really predict them, right? Putin is, annexing 20% of Ukraine, makes it part of Russia. How will US respond? You don't have controls over these events, right? The timing of these events, no reaction to these events. Nobody has control over this. And as hard as you want to try to predict it, half of the time you're going to be right, half of the time you're going to be wrong. So it's a random event. But what is not random is your ability to be a disciplined trader and follow your trading plan, right? Every day you wake up, you do 20 push-ups, you walk for an hour, you meditate, you pray, right? Open up your journal and you start writing, right? You start writing, very important part. Maybe push-ups is not the most important part of your morning routine. Maybe you do something else, like yoga, I don't know what it is. But journaling, I think, is a requirement to be a successful and disciplined trader. You have to open up a journal, even if it doesn't come naturally to you. And this is where you start writing your thoughts, right? You start writing your thoughts, and you start writing down what you have control over, right? Idea of this dichotomy of control. You have control over your actions, and you have control over your thoughts, right? You have to realize that, if you're always a bull, maybe you should at least listen to argument of bears. If you're always a bear, think of, consider arguments of bulls. You want to have a healthy discussion with yourself, right? You want to consider all the pros and cons. We're all biased. We're all biased over certain, bearish or bullish market. You want to write down all the pros and cons in your journal and then make a decision. How much money are you willing to invest based on your decision, right? How much money are you willing to risk? I propose we are in a bear argument. I'm not sure if anyone is actually still debating that part. So then I would propose 50% of your portfolio to be in cash. For a lot of, especially new subscribers, this has been a challenging statement, right? 50% in cash, or not even this part. The more challenging is this concept of 50% cash, 4 positions, 2.5%. So let's just spend a little bit of time on that and make sure there's no questions or arguments. Why 4 positions? Because as you can see, in the bear market, everything is highly correlated. There could be divergences, like Apple can post 52-week high, FedEx could post 52-week high, but if, a couple weeks later, months later, they're repeating the same pattern of spiders. So try to find in divergences or piling into energy names. It's not the right strategy, right? Because at some point, if all of your positions are in utilities or all of your positions are energy and they drop 20-30%, well, then your drawdown is too high. So I propose to have 4 positions, right? We already talked about, I would say 2 bullish, 2 bearish. Right now is appropriate. Maybe slightly bullish bias, slightly bearish bias based on your own opinion, but not chasing. I would not chase the market to the downside. I would not chase the market to the upside. Assume we're going to be range bound, right? Some kind of range, 20 points to the downside, 40 points to the upside. That's your range, right, for the 3 months. So 4 positions, 2.5% account value. Okay, so you open up account with $10,000. And then I propose 4 positions. Most people who are new to trading are only comfortable trading calls and puts. And most new traders don't trade puts. They are not comfortable bearish. You have to rewire your brain to be able to go long and short. By nature, 9 out of 10 new traders don't understand how you can sell short the stock or buy a put. How can you buy insurance on the house and you don't have the house, right? You just buy an insurance. So if this is a difficult concept, so then the next question becomes, okay, I'm buying 4 calls, right? I'm buying 4 calls position, right? I'm investing on a $10,000 account, 2.5% is $250, right? On $10,000, $250, that's 2.5% of account value, right? So let's say you buy calls, right? So I buy 4 positions, right? 4 positions, 4 calls positions at $250, right? You look at your portfolio, and then you basically said, well, Vlad said 50% of your portfolio should be in cash, but 4 times 250 is only $1,000, right? What do I do with the other $4,000, right? It's a good question, right? What do you do with the other? What do you do with the other? 5. So you keep 5K in cash, right? You keep 5K in cash. And then 1,000 is enough. What do you do 4K? So basically, when I say 50% in cash, I mean your equity exposure also. So even though you have 4 calls at $250, even if you buy, let's say, 1 contract of 4, $10 stock, right? 100 shares times 10, it's $1,000. So you don't have $250 worth of 4 calls. You have $1,000 worth of 4 stock, right? And when the market goes up and down at least 2% on daily basis, right? You could be down $1,000 very quickly. So the goal is to avoid being down 10%, right? And the only way you can avoid to be down 10%, right? Down. So that's the portfolio drawdown. So the next concept is portfolio drawdown. The only way to avoid it, well, in this example, if you only trade calls and only long position, well, you have 90% of your cash, because if the market does drop another, I don't know, 5%, 4%, right? If we break through the lows and you have 4 positions, you don't want to be down more than 10%. If you're going to take the $4,000 and kind of rinse and repeat and buy, another 16 positions of different calls, because you want to buy Bitcoin, you want to buy Rivian, you want to buy, I don't know, AMD and Nvidia, all the favorite well-covered stocks that you hear in news, but they all trade in the high correlation. If the market turns against you, then now you're down $5,000, right? 50% of your portfolio. So $10,000 portfolio, you can probably recover. 20%, you're going to be nervous and you're probably going to make mistakes because you're going to be emotional, right? So that's already not good. Anything above 20%, this you want to avoid, right? Anything below 20% drawdown, you want to avoid, because this is where you get emotional. This is where you not fall asleep at night, or you can enjoy the company of your friends or family. So the goal is not to be down more than 10% if the trade goes against. So that's the most important rule, right? 4 positions, 2.5%. Where earnings day, right? Nike, if you had a stock in Nike, maybe it makes sense to buy put spread and sell, collars, or do cover calls or merit puts, something that's protecting your stock positions. Do not chase, avoid revenge trading, look at the concentration. This is important. Do not call the bottom, right? Nobody knows whether the current level will or will not hold. But you can look at the signs of bottoming process. We're definitely going the bottoming process, and that could be an argument that we're probably not going to just have a capitulation in the month of October. Be flexible, right? You have to be, in the traded market, you have to be able to go long and short. If you can only go long, you don't know how to go short, or maybe you know but you just don't want to because you always go long, then all it means is that maybe instead of 4 positions, you have 2 positions, right? You use dollar cost average to lag into your trade, kind of like I'm doing with NOC. I've been trading around NOC, right? A lot of people ask me, do you only trade options? No, I trade stock. How do you trade stock? Like if you're trading options, you use dollar cost average, right? You buy at different level. Maybe you buy at 475, maybe you buy a little bit more at 470, you close at 484, but you're consistently, lowering your, you take the $250 of the worth of risk at NOC, right? This is another good example. Right, let's say you think this level will hold, right? If the market will hold 460, right? 360, if spiders will hold 360, most likely NOC will hold 464. If spiders will go to 350, then NOC will probably go to 440, right? So that's your stop level, right? So if you use dollar cost average, because you say, Russia-Ukraine war is going to continue, Europe is going to spend buying, aircraft and HIMARS and all the weapons. Okay, so your risk is, let's say, 440, right? But at this point, you do not want to be down $250 on $10,000 portfolio. You do not want to be down 2.5%, right? How do you do that? Right? How do you do that? Well, you calculate, right? 470 to 440 is 30 points, right? Risk is 30 points, right? $250, that means I can buy maybe 8 shares, right? 8 shares, right? Do I buy all 8 shares now? No, maybe you buy 4 shares at 470, right? And if you drop to 440 to 450, you buy 4 more shares. This way, if we drop to 440, you're down maybe, $200, maybe $180, right? But you incrementally doing buying, and that's one way to hedge your portfolio, right? When you trade options, you can long and short, or another favorite trade, you buy something that's inversely traded to the stock market, right? UUP has been inversely traded, right? Long dollar has been one of the favorite trades, right? It's parabolic move to the upside, or you buy, inverse ETFs like SH or PSQ, right? You buy asset classes that then if the market goes up, they will go down, and if the market goes down, they will go up. So far this year, it's been, treasuries directly correlated to the market, and treasury yield, right? Yield goes up, dollar goes up, UUP goes up, SH goes up. That means spiders goes down. Any other questions? Stochastics, do I think stochastics are the best? I don't think there's anything. They're all mathematical formulas, and most of the technical indicators, right? Unless like Tradespoon neural networks, but even neural networks, they're very similar, right? They have similar engine. Google has neural network, Facebook has a neural network. There's different MATLAB. There's different packages that have networks, maybe one slightly different than the other. That's kind of a more advanced indicator, modeling. Traditional modeling, RSI, they all have very similar mathematical formulas, slightly different. One using logarithmic charts, some does not use logarithmic. But, most of them, like if they're stochastic or if they're oscillators or if they're momentum, all momentum indicators, they are using similar formulas with slight variations. Inventory, yes. So Nike, Kevin, thank you. Yeah, Nike announced, and Walmart announced, it's the same thing, right? Strong dollar, high inventory, still, supply chain issues, still high inflation, product, wages. So it's the theme hasn't changed. Bill, mine is the best model, no, of course, right? But it's a little bit biased opinion, right? Because part of the truth, I can't say it's the worst indicator, right? That'll be, but yes, I think it's the best. I assume you're joking. Chuck, my thoughts on Google. Chuck, Google and is the same. When I draw a chart of spiders, we usually talk about this, right? When I drew my chart on spiders, what I think is going to happen on spiders, right? I think it's going to do right in October. We make it maybe new lows, and then November, December we'll get to 400. Google, Microsoft, Apple, they're all going to have the same charts. Right? It's not like spiders will go to 400 and Google will continue to sell off. It could be, right? Google could have an announcement like Nike, right? Nike now is divergence, right? Because I don't know what the earnings will be, right? I couldn't predict that Nike, is going to have, is going to be down 14%. Hasn't been down 14%, I don't know, 10 years probably on earnings. So that could be a divergence, right? You trade in single names like Google or Nike, there's always the risk of earnings, and nobody can tell you. It doesn't matter who you're going to ask. Nobody's going to tell. I mean, I hear these guys coming out on CNBC and Bloomberg, and they say, "Well, Google is a great buy." Yes, if it's then becomes the question of time, right? If your time horizon is 3 to 5 years, and you don't mind Google or Nike buying 10%, right? A lot of people say buy Nike, right? Consistently throughout this year. Nike is a great place to hide, pays you dividend, great blue chip stocks. Nothing's going to happen to it. And they are obviously right if your time horizon is 3 to 5 years, but what you don't know is that in the next 5 years, how much down can Nike be? And that goes with any single stock names. There's always earnings. One company will do better than the others. Very hard to predict, right? Very hard to predict. Most of them will follow the spiders and QQQ. There could be divergence. Nike is down. Let's see. Nike down. Nike is down now 55%, right? So Nike is down 55% from the top. Spiders is only down 25%. QQQ is down 35%. Nike is down 55% because of the bad earnings, right? If they had great earnings and stock would shoot up, if I have to guess in the next couple of years, or it will converge, right? The spiders will be down, X or up X number, and Nike, they will converge. But for now, there's a divergence. Same thing can happen with Google, right? Google, the risk is they are deriving most of their revenue from pay-per-click campaign, right? Digital advertising, people clicking on the ads and paying, insane amount of money. When the economy is contracting, the first budget cuts in every corporation is marketing, right? These are the first layoffs. These are the first budget cuts. So Google has the risk of coming out and have bad earnings, whether it's going to be this earnings in October or in January, I don't know. If I have to guess, Google chart is, has underperforming Apple, right? And most likely because Apple still derives most of the revenue from what is at least strong consumer for now. Apple derives, from marketing budgets, and so Google is down 36%, right? Google is down 36%, and QQQ is down what? I think it's a little bit less. Also 36. I think they're in line. 35%. So Google and QQQ down exactly the same, right? I think at some point Google will be down more than the rest of the tech stocks. Right? Chuck, thank you for your question. Yeah, Nordstrom, this gas issue is, this news are gonna continue. Very hard to predict. One thing that it's clear that, despite all of the supply issues in energy, despite all the supply issues with energy and, Russia, Ukraine, Well, guess what? Oil drillers are down as much as technology, right? Same, from top to bottom, same 36%, right? It's not, is it magic? No, it's just, there could be divergences, but everything is very highly correlated, right? I mean, Apple is, not down 36%, right? Top to bottom, right? 30%. But guess what? If there is during quarterly announcement, it actually confirmed that people are buying less iPhone 14 and they're not willing to spend $1,300 because retail sentiment is all-time low. Apple will be down 36%. At some point, Apple will be down 36%, and I don't have any doubts about that. But it could be in October, it could be in January, that I don't know, but it will follow the market. The divergence can only last so long. Chuck, thank you. Kevin, I agree with the Apple assessment. Apple is in trouble, right? I mean, it's not in trouble because it's still not at 50. It's outperforming Microsoft and Google. But but I think in the next months or in the next 4 months, it'll probably underperform Google, and maybe not Google, but Microsoft, right? Apple probably will underperform Microsoft because people need their Microsoft licenses to work. Maybe not as many because Facebook, Meta already announced that they're going to start doing layoffs, and other tech companies to file. So maybe they don't need as many licenses, but I think people will maybe use their old phones longer than companies will forfeit their licenses. All right. Thank you for your question. Let me know if you have any other questions. So what are the services we offer at Tradespoon to help you navigate this tumultuous market, volatile markets? I propose Elite Circle, right? Elite Circle, I propose services. If you don't have a trader's mindset, right? You cannot go short, you only buy calls, you don't know what to do with your cash. I would propose to find services where you are notified the real time of the trades, right? So you don't have to guess when to enter, when to exit, right? So this is Elite Circle. We have a few of these services. We have Elite Circle, we have a Shadow Trader, Spread Trader, Premium Portfolio. All of the common theme among all of these services is that you get SMS message or you get email every time I trade, every time I get in and get out. The only thing you have to decide, which trades to take, right? You don't have to buy NOC, you don't have to buy Micron, but at least when you get a signal, and let's say you have only 3 positions, you're thinking about what could be one more position that is offered, you buy NOC or you do the Iron Thunder and Micron. You'll know exactly when I enter, you know exactly when I exit. So your decision is, do you want to do it? Do you agree? And the second decision, how much money am I willing to invest into this idea, right? Nowhere do you see quantities. I propose, again, look at our discussion, look at the closing bell, morning bell. I will always tell you what my worst case scenario, what my best case scenario is trades for the stock market. And then, your goal is to make sure your size will not, if the trade goes against me, right? If Micron had moved beyond what I estimated, then you're not down more than 2.5% portfolio. So with option contracts, I propose to always do one contract until you're an experienced trader, confident trader with large, more than $10,000 account. Then you can do more than one contract. Until then, just do one contract. If it's Ford, you do one contract. If it's Google, $10 stock, or if it's $100 stock, obviously, as long as you realize that your exposure, one contract of Google is more than one contract of Ford, and you're willing to take that risk, and you might be down more than 2.5%, then okay, it's, as a learning experience, I guess it's okay. Or you just don't trade $100 stocks. You only trade, $20, $30 stocks. You're limited on what you can and cannot do. But I mean, there is a 10 share contracts. People, I don't know how popular they are, but there are people that trade in of 100 shares contract, they do 10 shares a contract, which this is another choice, right? Some broker dealers allow you to do that. All right. what am I bullish on now? I am bullish on the dollar, right? I think long-term dollar will continue going higher. I mean, it's pulling back now, which is good for the market, but oil will, dollar will continue going higher, right? I think TLT is gonna start going higher, but so far I've been pretty wrong about that. Thank you. Yes. Weekly Trader, Weekly Trader is a good service, but you have to make your own decision, right? Weekly Trader or Active Trader, these are experienced traders where we give you support and resistance levels. We tell you what to buy, at what point to buy, but you kind of have to do it on your own. When do you want to trigger it? So I propose, to still, I think Active Trader, Weekly Trader, Monthly Trader is for somebody who already have morning routine, that have solid trading plan, and they've been in the market long enough that they know what they're doing, and nobody have to tell them when to buy and when to sell, right? If you want to know when to buy and when I buying or when I'm selling, then I would propose to go with Elite Circle, Shadow Service, Vlad Service, Premium Portfolio. These are services where you will be notified when I trade. Telegram, okay. Kevin's still using iPhone 8, so good. I think my wife convinced me to go to 12. I'm still using 12. Probably not gonna, for a few more years until I convert. The cameras are much better. If you look at iPhone 8 and iPhone 14, obviously if you're traveling a lot and you're doing pictures, does it justify paying $1,300? Not sure. But a lot of these companies, they give you upgrades, right? You can, T-Mobile, I remember AT&T during COVID, like you would upgrade, and as long as you renew your contract, right, you commit to them, then it's almost free upgrade, or you pay a couple $100, like $100, $200. So it's not terrible. All right. 11:18. Do you guys have any other questions? Meanwhile, it's all about 10-year yield. That looks positive, right? We do have this reversal candle, right, on the weekly chart. If we have a follow through next week to 3.5%, then we can start talking about that. Probably the buying process is on its way, right? If we shoot to 4% next week, then the volatility will pick up. But I think this is a pretty bearish price pattern, which is constructive, and same dollar, right? Pull back, finishing week on a lower note. If there's a follow through next week to 110, same thing. That should bring the bottom to the market, at least short term. All right. Any other questions? All right, guys. If there are no questions, thank you very much. There's no closing bell today. I am traveling, so there's no closing bell, and I will see you guys on Monday morning. Thank you.